Good afternoon, and thank you so much for joining us today for our webinar on innovation in Latin America and the payments sector. My name is Abel Delgado. I'm the Digital Marketing Director for America's Market Intelligence, and I'm going to be serving as the moderator for today's webinar that's being produced in conjunction with Visa and America's Market Intelligence itself. Before we get started, we just want to give you a quick sense of what to expect in today's presentation. Basically, we're going to have about nearly an hour worth of presentation, and then the questions are going to be handled at the end of the webinar. However, you can ask a question at any point in time during the webinar itself. The way to do that is if you look at your screen, you should have sort of a series of icons on the menu bar, and one of them is Q&A. So you would just click on the Q&A icon. That's going to bring up a window. You can write your question in that window, hit enter, and we'll receive it, and we'll address as many questions as we possibly can towards the end of the webinar. So it's very straightforward in terms of being able to ask us a question, and as I said, you can do it at any point in time. So let's move on a little bit to talk a little bit more. Here we have our legal disclaimer. Now, as you can see, that's a lot to read. So I'm not going to do that because it will be here half the webinar with me reading this. What I do want to do is summarize it, though. Basically, the views that you're going to hear today are the views of the speakers themselves, not necessarily of the companies that they represent. So that's the major takeaway. And of course, there's other aspects of this legal disclaimer, and we encourage you to read it at your leisure as soon as you have time. But let's not spend too much time on it right now, because what we want to do is actually get to the data that we're talking about in terms of innovation in Latin America in the payment space. So let's move on here. This brings us to our speakers, and rather than me introducing them, they're going to be introducing themselves. So I'm going to actually open the floor to them so that they can say hello to you. Speakers.
Thank you, Abel, and thank you everyone for joining us today. My name is Vanesa Meyer. I'm Head of Innovation and Design for Latin America at Visa. My team and I were part of a global network of innovation centers and studios with the main goal of driving innovation through collaboration by co-creating new payment experiences along with our clients and partners. Lindsay?
Thanks, Vanessa. Thank you, Abel. Hi, everyone. Great to be here. My name is Lindsay Lehr. I direct the payments practice at America's Market Intelligence. We've been partners with Visa for many years now and partnered with the Innovation Center to produce this study. So we're very excited to present the results with you today. And I'll turn it back to Vanessa, who will give us some background before we get into the data.
Thank you, Lindsay. And so we recently published Visa's second edition of the innovation study along with America's Market Intelligence with the intent to measure innovation in the region. So what we saw that in the 16 months since we published our first innovation report, the payments industry has accelerated faster than ever before. And I think it would be safe to say that the fastest acceleration in payments innovation in recent history is happening now. Cash is being displayed faster than ever due to COVID-19 as consumers avoid it like the plague itself. We're observing a significant shift on how consumers shop, bank, and pay. And so we recently polled consumers in Latin America. And Abel, if you can turn to the next page, thank you. And saw that close to 70% of consumers said that they are using less cash, switching for debit, 39%, for credit, 32%, and digital wallets and peer-to-peer payments. And get this, we also saw that 22% said to use tap to pay in their last purchase. Another 82% said to shop online, with half of them buying at least once a week. And this is a real new trend. We saw that 65% are already adopting new e-commerce channels like WhatsApp, Facebook, and Instagram to shop for goods and services. So this said, there were pre-existing conditions or forces that were creating the right environment to drive innovation in payments. Next one, please. Next slide. Thank you. There are more than 1,300 fintechs. This is a record number. Fintechs are multiplying across Latin America. And 24% of those 1,300 fintechs are operating in payments. We saw venture capital soar to 4.6 billion with two major tickets, Nubank and Rappi, showing that fintech is maturing. And with internet penetration over 60% and smartphone penetration at almost 70% in many markets, app-based everything has exploded. This has fundamentally changed the way consumers think about payments and banking, which are increasingly being blended into mobile-based commerce experiences and more available than ever. If we think about commerce, the way consumers interact now with merchants is being radically transformed. They're getting more used to delivery thanks to platforms like iFood and Rappi. And if we think about banking and payment experiences, we see these experiences becoming increasingly instantaneous and based on mobile devices. So for example, as you can see in this slide, there are more than 50 million neobank users out of a total population of 260 million in the region. And if we look at Brazil, 60% of bank transactions are already digital. And there are more than 100 million registered digital wallet users. So in this context, we wanted to understand how different entities in Latin America are leveraging these conditions to innovate in the region. Next one, Abel, please. And so what does it take to excel in innovation, right? And so we launched the second edition of the study late last year. And due to COVID, we polled the most innovative entities again in March and April of this year with 3 main objectives in mind. The first one was to identify the most innovative entities in Latin America. The second objective was to identify the characteristics of innovative entities to help drive innovation overall. And the third objective was to track the development of innovation in the region over the time. And so throughout the presentation today, with my colleague, Lindsay, we will share what we've learned and reveal what innovative companies look like on the inside, how they operate, what makes them tick, as well as what is to come in the future of payments innovations in the region. So Lindsay, I pass it over to you.
Great, thank you. Okay, so, I think most of you probably intuitively know the changes that Vanessa was speaking to that we've all experienced this year, the fastest digitization, acceleration of digital payments we've seen in history, really. And this study will get into exactly what enables that, what enables companies to rapidly react to market changes and continue to solve evolving consumer problems and pain points. So just to give you all some background on this study, on the next slide, we'll see that we focus this research on 3 key verticals: financial institutions, including issuers, acquirers, traditional banks, as well as neobanks and digital banks, merchants of all kinds, whether they be a traditional retailer, an e-commerce merchant, or a digital platform, and what we call new ecosystem players, which is a catch-all category representing payment gateways, fintechs offering payment processing, and several other types of companies who are relevant to the payment space. We focused the study on these 6 markets, key markets. We had a few representatives from other markets, but really these were the key geographies we looked at. And in the next slide, for you to understand how we're going to structure our conversation, it's important to really get an understanding of how we think about innovation. What does innovation mean for Visa? What does innovation mean within the payment space? And how can we bring learnings that are really relevant? So when we think about innovation, we think of 5 key areas, what we call conceptual pillars. Internal culture of innovation. How ready from a cultural standpoint is your organization to create new innovations and respond rapidly to the external environment? External collaboration. How well does your organization work with fintechs, startups, and other innovative partners? How well are you sharing data through an API infrastructure? These types of questions. Use of technology is to what extent is your organization adopting and using the cutting edge technology in our industry, and how deep does it go, and how updated is your infrastructure? Execution, how fast, right? You have all of these ingredients that we've talked about so far, and how fast are you able to utilize those resources and execute, really bringing and deploying new solutions to the market? And finally, impact and scale. How far-reaching of an impact do you have with your customers across the region? On the next slide, we see the other component that we have in our conceptual framework is the phases of innovation. So down the left side of this chart, you can see those pillars that I just mentioned. And then across the chart, you see phases of innovations running from early through intermediate, advanced into mature or born innovative. And so we evaluated our participants according to each pillar and according to each phase. And when we look at the whole sample overall, we're able to really see how advanced are companies in the region, the 100 companies who participated in the study, how advanced are they in these different pillars, and overall really see where the opportunities are, really see the growth over time, and get a good understanding of where we are as a region. So if we keep going, we'll look at now that we have an understanding of the methodology and the conceptual framework, some high level results, right? So on the next slide, we'll see overall, we saw the very good news is that when we ran the study in the second version compared to the first version, we saw some dramatic improvements. And this is very encouraging. Overall, the growth of companies in the advanced or mature stages of innovation was equal to 24%. So 24% more companies were in the advanced or mature stages compared to the first time we ran the study. So we saw some really significant increases with respect to partnership with startups, use of agile technologies, use of multiple different technologies overall, use of APIs. Those were some of the key metrics that really we saw a massive improvement. And really impressively, Mexico was the country that really shined in terms of overall improvement and making an acceleration in innovation. When we look at the region overall, we see Brazil really having the bulk of innovative companies. In this graph, we have the top 30 most innovative, and 43% of those were based in Brazil. Mexico also had a good amount, but if you really want to look to the most innovative cases, we're most likely going to look to Brazil. So what are some of the key characteristics when we think about an innovative organization? What drives them? What are the key factors that produce that innovative result? So this is just very high level kind of storytelling around what is an innovative entity like. Within culture, internal culture of innovation, right? They live and breathe innovation. And that means that they, from a cultural standpoint, promote and enable ideation and experimentation. Employees at all levels are able to pitch ideas, develop them, and launch them. And this is enabled in the structure and encouraged. 70% or more of teams are using agile methodology. This is already a deeply utilized practice. And goes beyond just the technology team into other areas of the company. That culture leads companies to be very open externally, using hundreds of APIs and building their architecture actually on an API-enabled infrastructure, which allows for the free flow of information internally and externally. Actually, the most innovative companies had twice the number of APIs compared to the overall sample, and had 43% more alliances with startups. So we really see an openness within the organization, eliminating silos and creating synergies and partnerships with multiple external players. That, working with startups very often leads to the use of technology, getting access to new technology, integrating new technology, becoming ready and willing to experiment with new technology. So already 80% of our sample is using machine learning. And are already experimenting with next generation technology, whether it be biometrics, open banking. Most of our innovative companies are evolving towards an open platform, no longer seeing themselves as an institution, but rather a platform, introducing marketplace models and ideas of open banking. All of these factors combined prepare companies to really execute rapidly. And this is what really makes the difference when we're looking from the external. We can see that companies are launching new products, launching new services and features, making constant improvements to their apps and other functionalities. Innovative companies launch on average 17 new products or features per year, which is almost 40% more than the overall sample. And they do this 26% faster. So they're more prolific and they're more agile. And then finally, the most innovative companies have in their hearts and in their minds to expand and to scale rapidly. This is a goal, a corporate goal. So we see them expanding rapidly within their local market and across borders. And not only expansion, but having deep reach of their customers via digital channels. So hopefully this gives you a taste of what really some hard data on what an innovative company looks like, and we'll dive into this more in detail as we keep going on the next slide. We'll start off now. Vanessa and I will kind of tell you all about the 5 different pillars and some of the specifics that we saw when we look at innovative companies. So on the next slide, innovative culture is where it all starts. And without an innovative culture, without embracing these ideas, it's difficult to move in the other pillars. So this is why internal culture is the first one that we look at. We saw that here you can see the four phases: early and developing, intermediate, advanced, and mature, and how the company is structured and how the innovation team or center or innovative ideas are embedded in the company. And you can see that in the mature or born innovative segment, innovation sits at the middle of the company, very tied to corporate strategy, very tied to the top level executives, and all of the other business units are constantly interacting with this innovation, whether it's an explicit innovation center or more of an innovative mindset that's bred throughout the organization. On the other side of the spectrum, we have the innovation center sitting outside the rest of the company in a silo on its own. And so that helps support innovation in the company, but it's really difficult to accelerate because it's isolated with very little synergy with the rest of the company. And of course, there are gradations here, but it provides a spectrum that we can use to understand innovative companies. Among the top 30 most innovative, 71%, as we already said, of teams in these companies are using agile methodologies, which helps promote innovative thinking and fast movement across the entire organization. And you can see the difference, 71% versus 58% of the total sample overall. So it gives you some real concrete understanding of how innovative companies are structured and how they're working. So the next pillar we'll look at is external collaboration, and we'll have Vanessa take us through those findings.
Thank you, Lindsay. So when we look at external collaboration, to understand whether an entity is really willing to integrate into third-party platforms to drive innovation overall, we look at 2 main indicators: the use of APIs and partnerships with digital players, fintechs, and startups. So when it comes to the use of APIs, right? The use of APIs and its wide integration into the architecture of a company is an indication not only of having a more advanced technology architecture, but also of the willingness to share data and integrate internally to drive efficiencies and externally to take advantage of the exchange of data and integration with external partners. So when considering APIs, as you can see in the chart, we look at 3 types: those that are used for internal use only, those that are open to selected external partners, and those that are openly published on a development platform for widespread use. When we look at the data, it is true that the most innovative companies have a more API-based approach. In our study, the most innovative companies have twice as many internal APIs and 3 times as many APIs that are externally or fully open. And so the use of open APIs, when we compare to our previous study, we saw that it has increased significantly. Not only has the number of APIs increased by 60%, but the ratio of external and open APIs has also increased, especially among financial institutions, which experienced a huge increase in about 182% in open and external APIs. And this indicates is that financial institutions are increasingly willing to open their data to third parties as the global trends towards open banking are becoming more tangible in Latin America. And so we have some amazing examples of or use cases of APIs in the region. For example, we saw Replay, a retailer in Chile that uses an API to allow customers to upload an image and compares it to the company's catalog to buy the product right away. We also saw Magazine Luiza, another retailer in Brazil that partners with last mile delivery startup Logi to deliver products to its customers faster. And on the most innovative products or services launched that we saw in Mexico, for example, BBVA, through an API with Uber, allows drivers to create a digital BBVA account and a debit card to receive salary payments right away. So if we go to the next slide, here we look at the willingness of a company to integrate with third parties or with other companies' platforms, which is a way to measure external collaboration. And so by doing this, we can understand how the willingness of companies to really drive innovation through third parties to expand the reach and bring solutions to market much faster. And so why is this important? Because partnerships allow companies to efficiently gain access to experiences and capabilities beyond what they're good at, without spending the resources to acquire those capabilities themselves. The payments ecosystem is opening up more and more to new companies, with 28% more partnerships than what we saw in 2018. And the most innovative ones form 16 partnerships on average, which is 43% more partnerships than the general sample. The most innovative companies seek the intervention of startups to address specific problems as well. So a good example is BBVA in Mexico that created an interactive open space laboratory that connects different business units of the bank with certain startups. And this allows a multidimensional mindset to energetically tackle problem solving and weaknesses. And in this year's results, the data also reveals that the most innovative companies are more likely to establish all kinds of partnerships with startups, as we can see here in the chart, from a simple business relationship to an incubation or acceleration program, or even investing directly in a startup. By partnering with startups, companies often seek access to new capabilities that can help them offer new products and services to their customers. So when we look at financial institutions, it often has to do with improving the mobile experience, digital origination, the use of biometrics and other technologies that offer a better user experience to the customer, since, as we know, user experience is not usually a strength of the issuers. A nice example that we saw in our study is Banco Azteca, who partnered with Yalo, a San Francisco-based startup that uses artificial intelligence to solve customer queries via WhatsApp. On the merchant side, alliances are often about having access to more payment methods, payment processing, and logistics, also areas that usually are outside of a merchant's expertise. And so we see Magazine Luiza, for example, partnering with a startup Logi to speed up the delivery of products to its customers. When we look at partnerships, the biggest challenge is in partnering with startups consists of integrating the size and internal bureaucracies. Decisions are harder to make within large institutions, right? So integrating the size and the internal bureaucracies of large entities with the agility of startups is one of the major challenges when we look at this pillar. Moving on into looking now into the use of technology. Today's consumers demand business and payment experiences that require increasingly advanced technologies. So as we can see in the next slide, 56 and these we poll consumers, and this data is prior to COVID. So if we were to poll consumers again now, very likely these percentages would look much higher. But back about a year ago, consumers, 56% of consumers were already saying that they wanted to use digital wallets. And opening a bank account online requires digital tools to authenticate, to identify a user, such as facial recognition software that evaluates selfies, or assigning a virtual payment credential to a digital wallet is based on credential provisioning, push provisioning, and token technology. We saw that 51% of consumers want to make contactless payments with their card, and 44% want to pay without contact from their phone, using their digital wallets on their mobile devices. And this requires technologies such as near-field communication and QR codes. And until now, digital payment experiences require a card. Today, most innovative payment experiences require a mobile phone. But if we think in terms of the future, payment experiences will no longer depend on physical devices, but rather consumers will be able to pay with their own biometrics. And so we see that 49% of consumers already in the region want to adopt this type of payment experience, and 40% want to use voice recognition to shop and pay. Also, a very important trend, or a trend that stands out today in Latin America, also outside the region, but in particular right now in Latin America, is instant and interoperable payments through person-to-person systems. Card-based platforms demand tokenization services, which provide security and speed and fast fund enablement. And so delivering more personalized experiences in online shopping and customer service is increasingly based on artificial intelligence and machine learning. And so as the physical card begins to be replaced by invisible card on file payments, tokenization, Internet of Things are being used more and more. And so understanding or gaining an understanding on how entities are using these more advanced technologies was key for us to understand how innovative they are. And so when we move to the next slide, and in the analysis of the use of technology, we're evaluating how the companies are implementing these latest technologies and to deliver these enhanced consumer experiences. And so the data, as you can see in the chart, reveals clear trends. One, the use of technology by companies in the sector has increased since 2018, as you can see at the bottom of the chart. And there is also a clear technology gap that starts to show up between the most innovative companies and the sample in general. And so for almost all of the technologies that we've examined, we see improvements in adoption over 2018, albeit still with differences in levels of technology sophistication. We see the largest growth in the use of contactless, with close to 400% growth. We also see significant growth in the use of digital wallets, more than 88%, the use of biometrics, and so on. And we also see an increase in the use of artificial intelligence, more than 38%, and the use of chatbots. However, we see only a handful of the most innovative companies venturing into the next generation of technologies, such as voice recognition, integration with virtual assistants, machine learning, Internet of Things, cloud-based technologies, which will promote a seamless, integrated customer experience as we look into the future. What are some of the key examples we saw during our study? iFood is a nice example that uses machine learning to predict order patterns and create the most efficient delivery route for their drivers. Neon, a digital bank in Brazil, uses an iOS widget that allows the bank to transfer, that allow consumers to do bank transfers directly from their iPhone. And Banco do Brasil app, it's integrated already with Google Home. And as a consumer, you can start a banking transaction at Google Home and finish it on your mobile phone. And the one that I love the most is PicPay, which is a digital wallet in Brazil that implemented payments with facial recognition in select coffee shops. So as you can see, we are seeing a handful of innovative firms venturing into the use of more advanced technologies. We saw a significant improvement compared to our prior study, but still, we see the gap spreading up between most innovative and the rest of the sample. So Lindsay, I'll pass it over back to you to talk about execution.
Okay, great. So execution, right? It has to do with how well are you able to act on all of the internal work that you've done. If you are really set up well from a cultural standpoint, if you have these external partnerships and high use of technology, you then need to take all of those tools and actually execute and bring new innovations to market. So this is a really key pillar. And we know that especially during COVID, things change and we need to respond rapidly. And those who respond first are often the ones who will win in the long term, and are able to really delight customers and solve their problems and then gain their loyalty. So execution is really critical. Time to market, we looked at how are companies developing new proofs of concept? How does it move through their innovation pipeline? And how fast are they able to bring new innovations to market? This could be anything as from a simple app update, an incremental improvement on a feature in your mobile app or on your website, to launching an entirely new product. So the average, there's a wide range here that we're talking about, but on average, as you can see, it takes about 6 months for this overall sample to launch a new feature or product. Now, when you look at the top 30 most innovative, you see more than a month on average faster. And when we're only talking about a span of 6 months, 1 month makes a big difference. Now, of those 30, now the top 30 had a combination of brick and mortar companies as well as digital natives. And when we look at the digital natives, we can see them moving even faster, almost 42% faster than the sample overall. And that really makes a difference when you're talking about needing to respond to changing consumer needs. So really some impactful, powerful data there that gives us a sense of who is moving the fastest and how fast do I need to move to be competitive. What's also interesting is that not only are digital natives moving faster, but they're getting faster at a faster rate, if that makes sense. So from 2018, the improvement in their time to market was 29% for digital natives compared to 9% for all entities. So they're faster and they're getting better. They're accelerating at a faster rate, which creates the potential for this gap to enlarge. So really a key metric to be paying attention to. And I love this quote here. How it raises the question, how do you get faster? How you have to go through all the steps of product development. How do we get faster? And one example is a company who said, look, we often just skip the pilot phase altogether. We'll launch the product, doing a silent launch, making it available to only 5% of our users to see if it's working. Then we analyze the results, make modifications as needed. So being a little bit more just proactive and aggressive and not so cautious can help companies move along this journey in the most efficient way. And so this, as well as speed, we have to think about the quantity of new ideas that companies are producing and what this funnel looks like. Because at the end of the day, product development is a funnel. You start with lots of ideas, you whittle them down to the most viable, and then you have a handful of ones that you actually fund and actually launch. So here you can see a little bit the process and the number, the level of ideation that's going on in the most innovative companies versus the total sample. So ideas that became a prototype. Prototyping is kind of the first step, coming up with an idea, creating a prototype. So among the top 30, over 100 ideas became a prototype in the last year compared to just 52 of all entities. So that's more than double the level of ideas that are being circulated, being created, being tested, or being made into a prototype. Then you go into the testing phase. Still, you have about double the ideas in that testing phase. Then once they're tested, they actually become actual proofs of concept, and then those proofs of concept are launched to market. So in the end, the most innovative had almost 40% more proofs of concept launched. But that funnel gets big up at the top with more than double the number of ideas that are actually at the beginning of that pipeline. So that means that you're going to have a lot of ideas that quote unquote fail, or a lot of ideas that don't make it to being launched. And that speaks to an underlying culture and an underlying willingness to invest in things that may not produce an ROI at the end of the day. But with the idea being, the more creative, the more you have these creative juices flowing, the more you're going to land on this really successful idea that will take your company to the next level. So very interesting to see how execution connects to culture and enabling an environment of creativity. On the next slide, we'll look at our final pillar. Okay, so impact and scale. How all of these pillars help us connect to how much of an impact companies are having at the regional level. So if we go to the next slide, we can see how companies are expanding across borders. Now, especially in payments, expanding internationally is not easy because every company has a different regulatory system, different banking setup, different payments landscape, and that is challenging, we know. But we can see that, so here we see the number of countries where companies currently operate, and the number of countries that they've expanded to in the past 3 years. And we can see that the digital natives, again, are leading the pack. This makes sense. It's easier for a digital company to expand than a brick and mortar company. And it just provides evidence that there's a subset of competitors that are really leading the charge and gaining greater reach and impact across the region. And we can also see this on the next slide when we think about reach is not only where you're operating from a geographic point of view. It's also how are you able to reach customers where they're at. And one of those channels is in the mobile channel. Now, this was done, again, pre-COVID, but we can see the percent of mobile users active in the last 30 days. And again, we see the digital natives very being forward in their mobile strategy. Of course, that makes sense. But it really speaks to how successful are companies at engaging customers in the mobile channel, which is where we spend so much of our time every day. And so not only how large is your audience on the mobile, but what percent of them are active and actively engaging with you on a monthly basis. Okay, so we've taken you through all of our 5 pillars. Hopefully you have a really good sense now of what made up this study and some of the key data points. And I'll turn it back over to Vanessa to leave us with some final conclusions, final thoughts.
Thank you, Lindsay. So based on how the region has improved and the lessons learned from the most innovative, here's where we believe the payments industry is heading. And so by looking into the most innovative firms, we see that we're moving into a new era in which the lines between companies are blurring, making payments, banking, and commerce available across every channel at all times, becoming more invisible and a seamless part of our lives. So most innovative companies are expanding their reach into third-party platforms. Moving forward, we expect fewer companies being self-contained institutions with clear boundaries. Instead, we'll see increased partnerships and openness with companies combining forces. And so in this context, consumers will experience companies as platforms rather than institutions. This is already happening. Rappi is a great example. With just one app, customers can get a car service, can place a restaurant order, do remote supermarket shopping. Providing an array of services like this dramatically expands client reach. Second, consumers will also have ability to buy, pay, and bank in one place and in unprecedented places as well, right? In the Latin America of yesterday, you went to the bank to manage your money and to the mall to shop. Well, that paradigm has changed. You no longer have to go to the bank or a store. Banking and commerce opportunities are increasingly embedded into our everyday lives, coming to us rather than us having to go to them. Mercado Pago and Mercado Libre are a great example, right? Mercado Libre, the largest marketplace in Latin America, is offering banking and investment services along with its digital wallet, Mercado Pago. The next thing is online and instantaneous banking. Think about what the experience of getting a new credit card has been for most of us. We would have to wait 1 or 2 weeks to get our plastic in the mail. Well, now companies like BBVA and Banco do Brasil get you that card instantly on your phone. And companies that can do this will accelerate commerce farther and faster. And last but not least, customer-centric everything. It is clear that the payment experience matters, and eliminating consumer pain points will continue to drive consumer habits. So companies like Neon, the digital bank from Brazil, allow you to see every place your credentials have been used and stored. Why is this helpful? Because these days, we use our credentials everywhere and forget about it. And this allows customers greater control and privacy protection. So this digital acceleration is bringing the future to us faster. Moving to the next slide, we can see here that LATAM consumers are becoming empowered, getting a taste of choice, flexibility, spend, and control. And there is a high correlation between having a technology platform that supports these empowered consumers and driving company growth, client retention, and new client acquisition. So simply put, digital technology is empowering new distribution, communication, and acquisition channels. The experiences in this slide define the future of payments, the future of banking and commerce. So let's take a look. Being able to shop and pay using virtual assistants from the comfort of your couch, ordering and receiving the product within minutes. Internet of Things experiences like driving your car into a shopping mall or into a parking lot and have your car communicate directly with the parking meter to calculate the time parked and to initiate the payment. Being able to pay with wearables, with digital wallets, but also being able to pay by just being you, with your face, with your voice. So payments in general will become more invisible, more instantaneous across all channels. And the list can go on, right? But in this context, what is important is that we need to conceptualize payments for what they really are. They're a tool to empower and enable. Payments are not the end, they are the means to the end. So companies who can align with this reality will be best positioned to serve consumers who are looking for upward mobility and ultimate expansion. So what does this all mean to us, right? So if we go to the next slide, what we see is that what this means is that moving forward, companies must do 3 things. Adopt a culture of constant change with a true passion for the customer, where they ideate, experiment, and iterate fast. Companies also need to rethink their technology as an omnipresent platform. They must make payments intuitive and integrate part of consumer lifestyles. The clever use of APIs and integration into other companies' capabilities for biometrics, tokenization, artificial intelligence, machine learning, Internet of Things, creates payment experiences that no longer tie consumers and merchants down to hardware. And third, companies need to radically embrace partnerships and industry integrations. We saw that in today's world, collaboration is becoming a competitive advantage. You no longer need to do this all on your own. Technology is enabling collaboration and paving the way to continuously create seamless experiences for your customers for all channels, mobile app, web, and social media. And to come to a close, we need to understand that the digital acceleration that has come on the back of the pandemic has put digital experiences front and center in every aspect of our lives. We live now in a digital first world, and there is no turning back. From here out, digital experiences come first. And so this brings us to the end of the presentation. We have some questions coming up, and I'll revert back to Abel to open up the Q&A.
All right, thank you so much, Vanessa. And yeah, let's get started with some of our questions here that some of our audience members have. But before I do that, I do want to remind you exactly how you would ask a question. Basically, you would go to your panel there, you see a series of icons, and one of them is going to be Q&A. You just click on that, it brings up a window, and that'll allow you to ask your question. So if you've joined us late and didn't hear these instructions before, that's basically how you ask a question. Just go to that Q&A icon, click on it, it'll bring up the window, and you can write in your question and fire away any of the different stats that we've discussed here or other concerns you might have. So let's get started with some of the audience questions that the panelists can field. One of them is kind of a basic one, I think, that's related to the purpose of this actual event, and that would be, how has Visa been supporting innovation?
All right. So similar to the conclusions of the presentation, right? So I would say Visa is supporting innovation in three main ways. The first thing, which is key, is that we have embedded design into our strategy. We live now in this digital first world, and our mission is to simplify people's lives by offering more secure, convenient, and fast ways to pay through multiple digital means. And so everything we build starts with our clients in mind to enable the best digital experiences. And we have the most talented design team in the payments industry. The second thing is that we have rethought, I don't know how to say, we're rethinking our technology. We're creating the next generation of VisaNet by re-architecting the tech to deliver open standards, commodity software, and advanced artificial intelligence and machine learning to deliver speed, reliable security, and scale. So we're investing to enable cloud connectivity. This year, we introduced Visa Cloud Connect through AWS, eliminating physical connections, moving to API connections that are cheaper and faster. If you are a new issuer, you can start in the cloud and test. So when we combine the scale of VisaNet with the ease of cloud connectivity, we make it easier for everyone, everywhere to connect with us and start issuing Visa credentials. On the seller side, we're also investing in the cloud. There is a massive opportunity with more than 50 million merchants in the region that do not accept Visa or any form of digital payment, and that rely only on cash and checks. So one significant barrier is the cost and complexity of deploying and managing physical point-of-sale hardware. We recently introduced Visa Acceptance Cloud, and by virtualizing the terminal and eliminating the constraints of hardware, we are enabling our partners and sellers to develop new innovative point-of-sale experiences and services. Like, for example, tap to phone, turning any smartphone device into a device that can accept payments. And with the migration of apps to the cloud, we saw that mobile-based experiences have exploded. There is an explosion of data being created. And artificial intelligence is part of the fabric of Visa, and we're constantly investing to improve our artificial intelligence, our machine learning tools, to drive insights from this ocean of data, making payments smarter, faster, and frictionless. And so we're expanding the frontiers for Visa as we're no longer constrained by wire infrastructure, payment type, form factor, or the reach of our physical network. And the third thing is that we radically embrace partnerships and industry integrations. At Visa, we work side by side with our clients and partners to create the next generation of payment solutions that are more directly aligned with the marketplace and solve real-world problems. So this evolution of our role lead us to think less about specific products and more about payment capabilities that we offer through APIs, and about how our partners can leverage them to create the best consumer experiences for their clientele. So I would say those three things are the main things that we're doing right now to drive innovation forward in the payments industry.
Okay. Well, we've got a flood more of other questions. One of them I think that's interesting is in terms of the parameters of the study itself. They were asking, somebody was asking here about, who is defined as a digital native? And that, I think that would be good to address because that's part of the study and a significant portion of that. How is that defined in the parameters of the study?
I can respond to that. Yeah, a digital native is simply a company that was born in the digital world without any physical channels. So in contrast to a traditional bank or a brick and mortar retailer that have stores and branches, a digital native is simply a company that interfaces with their customers digitally. So an example would be Rappi, would be digital banks like Banco Neon that Vanessa mentioned a couple of times, companies like that.
Okay, so we have another question here that has to do with cash, and of course that's a persistent issue in Latin America. And so one of the things that this attendee is pointing out is that there's an informal economies in a lot of different countries, like Peru, for example, and so a lot of cash transactions are made. And so the question is, there are factors like tax evasion and other things that also foment this sort of thing. And the question is, how do you accelerate innovation in the face of these kinds of factors, this dependence on cash?
Right. So I guess I'll take that one. So definitely, there are still a number of barriers that exist out there, right? That are slowing down the digitalization of payments overall in the region. And as pointed out in the question, tax regulation is one of them, right? And so it is very important for everyone in the ecosystem that we work closely with governments to educate them on the benefits of digital payments, so that they can come up with the right regulations for fintechs, for taxes, so that we can really remove some of those barriers. But it will take a collaborative effort and to work very closely with the ecosystem and with governments on that end.
All right. To shift gears to a much more specific question, we have one here from Monica. And that question is, in your opinion, which will be the payment method offered that will shift the user experience when paying via e-commerce? And I guess the question here is, like, what will be that payment method that will really change that whole experience? And I'm not sure if it's one method or several. I don't know what you guys think from that standpoint.
So I believe, like as we were pointing out throughout the presentation, right? Payments is a mean to an end, right? And the more the payment experience become frictionless and invisible, the better for consumers, right? And so thinking about the future, there are a number of technologies that can remove friction from online payments and when buying online. Things like current file tokenization, the use of artificial intelligence, machine learning, using data to effectively be able to authenticate the user, and then the use of biometrics, right? Being able to confirm a payment transaction using your voice. That might be one of the payment experiences that when you are at your house, for example, you could finish a transaction by confirming with voice, a purchase that you're doing through your Alexa or digital assistant device at home or through your phone. So moving forward, we're start seeing more of a combination of a number of technologies that can enable these more frictionless, seamless payment experiences. And some of the technologies that will empower that have to do with cloud tokenization, with the use of advanced biometrics, artificial intelligence, and machine learning.
All right, thanks so much. We have another interesting question here. I don't know that we can answer it though, because it may be a little bit outside of the scope, but it's asking us if we have data on the average size of the most innovative companies and if there is some sort of a sweet spot in terms of the size for a company to be agile and innovative at the same time. And it'd be interesting to see what you guys have to say about that.
Lindsay, do you want to take that one?
Yeah, I can. I think that's a great question. And what we saw in our results is that actually in the among the most innovative companies, we had a wide variety of very large, huge leaders in the industry, and also smaller startups. So that tells us that size isn't so much the variable that matters. Now, of course, you have to be of a certain scale and size to have gained some traction and make an impact in the market. So very small startups, I would exclude. And there's also the thought that big companies are slow and not so innovative. So the study really disproved that myth. So you can have small, mid-size, and large companies be innovative. It's really much more about the mentality and the internal architecture of the company. And we've seen even, the most traditional companies in the world or in Latin America really embrace an innovative mindset and culture and inject it on all areas of the company to become, of the most innovative institutions in the region. So I would say that we don't have a real sweet spot for the size. There's variety, large and small, and it has a lot more to do with other factors.
All right, thanks so much. We have another question from Juan, and that is, what is your vision for the potential interoperability of the so-called super apps ecosystem in the LAC region?
I can take a stab at that.
Kind of a tricky one, no?
Well, what is my vision, right? It's a good question. There's a lot of talk about, will there be one dominant super app? And my answer is no. I don't know, Vanessa, if you have a different opinion, but I think that there is enough variety, variation, and across the region to support companies in all areas, in all different niches. And to the extent that the market continues to grow, you'll have the opportunity to move into ever more payment use cases, which creates space for more and more players. And so I do not see any one player monopolizing the market. At the same time, and interoperability is a driving global trend. And closed loop circuits continue to, they reach a limit where you can't grow beyond, because when you're closed loop, you limit your users' ability to use your platform in all different areas. So I think the trend is towards increased competition. The trend is towards increased interoperability. How this will happen is maybe what you're asking. I don't have a clear answer for right now. A lot of it has to do with government and country level infrastructure. We're starting to see this now in Brazil with the Pix instant payment infrastructure launching. WhatsApp also trying to launch their instant payment space. So to gain interoperability, I think more and more as we've said, companies will continue to act more as platforms where all different types of use cases can take place that enables interoperable payment experiences, and that will continue to grow, I would say.
All right. I wasn't sure whether Vanessa had anything further to add to that one, so I just want to open up that little bit of space. But let's go to another question here. There's one that's a more general question, but I think it's important considering the scope of the study, and that is, which is the most critical barrier to innovation itself? Is it culture, budget, or mindset?
Well, maybe Lindsay, you want to also, complement here, but we do believe is culture. And as Lindsay kicked off the presentation, one of the reasons we start talking first about internal culture for innovation is because we truly believe that's the very likely the most important barrier if the conditions are not there, right? So promoting a culture of experimentation, having open channels of communication, having defined processes to unlock ideas from across the organization so that they can come to light and be evolved into a proof of concept that can then turn into an MVP are key to be successful and drive innovation, right? And it has to do with the culture where innovation becomes the role of every employee and not just a few areas. And with that, the adoption of agile ways of working, agile methodologies are tools that can be implemented to enable and transform that culture into a culture that is more innovative. So I don't know, Lindsay, if you would like to add anything to that.
Yeah, I like that answer. I think it's a fascinating question. My quickest gut reaction is to say that budget is never the number one barrier. That's the excuse. Okay, you guys know in your own personal life and in your companies, you know that if you want something bad enough, you find the budget. So, budget is an excuse for when you don't really want to do something. The mentality and the culture, I'm not sure exactly how you're thinking about the difference between those two, but the mentality comes from, right, the leader in the company who wants to push something forward. Is this that mentality then flows, it spreads, and now it creates a culture. And then once you have the culture, now you have the breeding grounds for successful innovation. I think, as Vanessa mentioned, a key barrier beyond culture and mindset is the how-to. How do I do this? I want to do it, but how do I actually implement it? And hopefully this study has given some key building blocks that are helpful in building an innovative organization. Because that's where companies when you don't know how to do something, you kind of lose your momentum, you lose your energy. So I think that's a key thing to pay attention to. And there are answers out there. You just have to find them and find the right help, and then to continue that momentum going.
All right. Well, thank you so much, Lindsay. Well, it looks like we're just about out of time here. We're over our hour designated here for this webinar, so we're going to be wrapping this up. But we do want to let you know that we are going to be sending some of the resources here that we discussed today. So one of them is the white paper itself. So that's out, and we'll be sending that to you as attendees to the webinar. So you'll actually find all of the data that we've been discussing here in that particular white paper, and you'll be able to go over it. And then, of course, we'll send you the video from today's webinar as well, so that you can have that as a reference point. That has some of the data as well, obviously, and the questions answered and such. So hopefully that'll be a good resource too for you to get a good understanding of innovation in Latin America in the payment space. So thank you so much for joining us. We hope you have a wonderful day, and hopefully we'll be able to see you at our next event. Thanks again. Bye-bye now.